6 a.m. on the 22nd of February. So, another video explanation. This is the DAX. Slightly confusing, but it's certainly interesting. We can actually take this trend line off here. So, we had a good run up in the DAX, and then we built what I thought was a head and shoulders pattern. Very negative indeed. Market came off. We've had a bounce. Right. On the daily chart, I spotted the inverse head and shoulders, which you can see here. Right. Left shoulder, head, right shoulder, break above the neckline, all very bullish. So I really did believe this pattern was going to work, especially as we managed to get above the 100-day average and were holding. Yesterday concerned me. This isn't the most positive candle. You know, the long upper wick with a small body isn't the most positive candle as we become overbought. And we have got this trend line here going back to the top of the rally, really. So can you see this trend line here? It joins all the peaks nicely, and it's significant because we've got one, kind of two, three peaks, and now this is the fourth peak. I thought we could get through this yesterday, and we didn't. And with that negative, kind of mildly negative candle, well, it's more of a neutral candle than a negative candle, but anyway, it worries me. And when you look at the weekly chart, we have perfectly hit the 200-week moving average, which runs into this neckline to the head and shoulders. And we're pretty much bang on it yesterday in the high 11,400 area. If I just zoom in on this, it'll be a little bit clearer. So I'm kind of changing my mind. It's an awkward one because you've got the big head and shoulders pattern, you've got the small inverse head and shoulders pattern, you've got the trend line, and you've got the neckline to the head and shoulders. You've got two trend lines really. You've got the neckline to the head and shoulders, you've got this downward sloping trend line, and you've got the 200-day moving average. So I don't know. I thought we were going to get through there. We didn't, and I'm going to change my mind. I'm now going to get negative. So I did send you an email a few hours ago, 4 or 5 hours ago, to say, look, we haven't broken this, and I don't like it. So get out of the longs. I think there was still some small profit on the longs, not what I was hoping for, but I've changed my mind. That's it. Simple as that. I'm now going to try to sell any rally today. I'm hoping that we'll go back. We got up to 11,480. So any move from 11,400 up towards 11,480, I've got sales up at 440, 450, 460, 470. I'm going to try and scale into a short anywhere up to 11,500. If we break 11,500 and if we close above 11,500, it's Friday, so it's the weekly close. So that's important. Then I will be wrong and I will have to turn bullish again. But for the time being, I haven't got a position. I'm out of my longs and I'm looking to get short on Friday. US stock markets are also starting to persuade me that they could turn lower. This is the weekly chart, squashed up at the top of the page, but this is a weekly chart for E-mini S&P. So this is not a particularly positive candle on the weekly chart. If we close, where do we open this week? Opened the week at 27.77. So at the moment we're trading below there. So we close below 27.77. That's not going to be a very positive candle on the weekly chart, and we're getting a little bit overbought. Nothing significant. But then when you look at the daily chart, you see that we have got trendline resistance from these peaks in the middle of October, beginning of November, beginning of December. We've hit it and we've reversed. Now this is definitely a warning candle. We've got a bearish engulfing candle on the daily chart, on the E-mini S&P, coupled with pretty severely overbought conditions. I'm going to take this as a minor sell signal. You know, we've had a huge run up, haven't we, for the last, well, almost 2 months. There's no reason why we can't at least retrace some of that. But I'm starting to wonder whether we will actually see a decent collapse. The short-term charts don't really tell me anything. The 1 hour chart, I was looking for some sort of pattern. Well, this could form something of a head and shoulders pattern. But I think I'm clutching at straws here. I don't think that's really very significant. But I'll keep an eye on it. I'll keep an eye on it nonetheless. And see if we have a little rally up here and then dump. The 27.77 area happens to be the 100 period moving average, a 100-hour moving average. So holding below 27.78, 27.80 would be negative for even the S&P for today. We do have a little trend line up at 2800 as well on the 4 hour chart. Hang on, let me show you that. Okay, so this is the channel that we are trading in the E-mini S&P in the short term. This is the hourly chart. You got your upper trend line, you got your lower trend line. So you can see we peaked exactly there yesterday. I didn't suggest a short because I just didn't see anything particularly negative in the E-mini S&P and the other stock markets. So missed the trick there. That would have been a great short. We've broken this little 2-week trend line as well, which happens to coincide perfectly with the 100-hour moving average. So watch that 27.7880 level. If you like this idea of shorting the indices, that could be your first point to start getting short. And then if we get back up to 2800 to 2803, you could add to that short position and then hold that over the weekend and see what happens next week. That would be it really. The trend line I'm talking about on the daily chart comes in at 2790. So really, from 2780 up to 2800, there's three resistances up there. And if you like the fact that we're overbought and you think the stock markets have overdone it, especially with this negative candle here on the daily chart, then you'll probably want to be looking to sell into any rally today. Dow Jones also has a negative candle from yesterday's price action, bearish engulfing. So not a huge one, but still I think we need to pay attention to it when the market is so overbought. I don't think there's anything on the weekly chart to report. No, not really. But you can see, we're running into the area where we had previous highs, although there's no trend line from it, like there is in the S&P. We're running into areas where there was previous highs, where we reversed quite dramatically in the past. So maybe that's what's in the back of investors and traders' minds as we reach these areas around 26,000. Potential negative candle on the Nasdaq, as you can see, with a new high this week, but at the moment we're trading down on the week, so that's not particularly positive in an overbought market, as you can see. And yesterday, another negative bearish engulfing candle on the Nasdaq. Now, I've talked about this 200-day moving average and said that this is causing problems for the Nasdaq. Well, it's caused problems for the Nasdaq every day this week. Really haven't managed to break it. And a few days ago, I wrote, I wonder if the Nasdaq will drag the US stock markets down. And I thought, no, that it won't. I thought the E-mini S&P and the Dow will keep going higher. Well, they did go higher, but the Nasdaq did not go higher. So now I'm wondering whether that will actually come true, and the Nasdaq will drag the US stock markets down. So you can see, I hope you can see what I'm talking about here. I am sort of starting to build a negative picture on the US stock markets, and the DAX certainly could turn around and see a big sell-off. I'm going to try to get short. Well, I'm going to get short on any strength in the US stock markets and the DAX today, Friday, and hope that we close lower these negative candles do have an impact. Right, I talked about gold yesterday, and I talked about how we turned around from important resistance at the trend line, which you can see on the weekly chart here, which joins up all the peaks from 2014 peak, 2016 peak, almost the 2017 peak, and the 2018 peak. We didn't quite get there. I would have been looking for a short at 1355, but we were 10 points away from it. We were 9 points away from it. This week, we didn't quite hit my target, but 46 was a target, and well, I can only hope that you got out of your longs there. I didn't advise you to, but we had a 16-point rally, so hopefully you're out of most of them. Yesterday we collapsed way further than I expected. We had this slightly negative candle on Wednesday. I didn't think it would lead to such a dramatic sell-off, but it did. Now this 3-candle pattern is very negative. I forget what you call it now, but it's very, very negative. Big blue candle, this long upper wick on the middle candle, big red candle that follows, wiping out all the gains. This is a really negative pattern. I do see some good short-term support at 1320, 1319. There's a few reasons why I see that, especially on the short-term charts. So I think it's worth a cheeky long, just because we're oversold in the short term. We could have a little bounce back, maybe to 1330. So there could be a 10-point profit in that. I think it's worth trying it. If we get to 1330, anywhere from 1330 up to 1345, we're gonna have problems. We should have problems because because of what I've just said, this 3-candle negative pattern, and the fact that we reversed from just below very important longer term resistance. You take my word for it. Okay, I'll show you this on the monthly chart. You'll remember this from yesterday's video, but on the monthly chart, we do also have the 100 month moving average at 1354. So the fact that we topped below all that just looks negative for gold. I just didn't expect it to react so violently yesterday. So I did expect silver to turn around and go lower yesterday. I did advise you to get short silver, and look at that. Big, long upper wick, double top. We opened the week at 1578. I think we'll close below there this week, and I think we'll get a negative candle here on the weekly chart. We're overbought on the weekly chart as well, as you can see from the slow stochastic. I'm really just running over what you already know. We've got a decent double top pattern here at the 500-day moving average, at the trend line, which goes back to September 2017. See that trend line? Look how we've just, well, we didn't quite kiss it, but we certainly kissed the 500-day moving average before we reversed. So yeah, this all looks negative now. Gold and silver looks pretty negative. Hopefully you're short silver. Just run that short. I'm short. I'm keeping it. I would not be surprised to see us down at 1530, 1520, which is down here. It's a really decent move. We'll see what happens. These moving averages will have converged by the time we get there, because it'll take at least a week or so. We'll see what happens down there, and whether we should be getting into a long. I'm not sure yet. As I say, gold I think could hold 1320, 1318 and give us a little bit of profit on that trade. But if we get a 10 point bounce off there, I would start getting short gold too, because a longer term gold looks nasty. Okay, WTI crude's also had a decent recovery since the end of December, a good run up. We've run straight into the 100-day moving average and come to a halt. We've also got this trend line, which is decent enough. It's just over a month. That's managed to also hold. We peaked above the 500-day moving average. So the question is, do we close the week below it? 56.68 is the value of that. Yeah, I do think there's a good chance oil will sell off too. Whether that drags stock markets down, I don't know. Yesterday we had a high of 57.61, so that was just one tick above the previous high and a lower close. Not the most negative candle in the world, I know, but still it does add weight to my theory that the oil market has topped and will turn lower. So if you did manage to short yesterday, well done. I think it's worth holding that short. At least let's see if we can close Friday below the 500-day moving average, around below, say, 56.60. That would give you some confidence to hold the short into the weekend and see if we can head lower next week. I would suggest 54.80, 54.50 would be a good target on that short, which I suggested yesterday morning. Where did I say that? Well, I said that with a stop above $58 or something, I think I did. So yeah, working at the moment, that short trade. Remember this head and shoulders pattern in the dollar index, shoulder, head, shoulder, looks like it is playing out. I did warn you when I saw these two negative candles that the dollar index could head lower and complete this pattern. I did also warn you that this would be the best support of the week, this cluster of moving averages, and that's held. So maybe we bounce from here, but in the long term, this is what we're watching for a test of the 200-day moving average and the neckline, and a break below there is our sell signal, just waiting to see if this right shoulder develops, and we will need to close the week below 96.30 for this to, well, start to materialize and at least lead to a test of the neckline.